Hello investors and traders. So today we'll speak about Netflix, its Netflix stock, its technical and fundamental analysis. And let's start with the monthly chart. We can see that from very beginning, from its IPO, Netflix is trading in the racing channel. And let's move to the weekly frame. We can see that here from 2018 we had the impulse wave. I remind you that I'm trading the Elliott wave theory. So in my mind there it was an impulse here. It's the first wave, then we had the correction in second, then here it was the third wave, then some kind of flat correction, the fourth wave, and here by the end of last year this impulse ended. It was the fifth wave. And now in my opinion we in the final of this correction. So the wave C is somewhere in my mind is going to finish near these levels. Also in standpoint of momentum, there is an indicator. It's a weekly chart. We can see that it's 21, so it's heavily oversold. And if we move to the monthly chart, also it's below 30, only 28. So also let's check that in the history last time we traded so low, it was 2012. So now I think in standpoint of technical analysis and the momentum of this stock now, Netflix, it's very good time to buy this stock. Of course, some personal hold this stock in my portfolio, and it's one of my heaviest positions. Let's have a look on the parameters of Netflix for today. The financial position, we can see that the ratio of cash to debt is less than 1. It's very good, so the company doesn't have a lot of debt. Also the ratio of debt to EBITDA also below 1, so any problems with that. Its cash position is very strong, and also we can see here that the Altman Z score, it's a parameter that showing us the probability of bankruptcy in the future years. It's above 3, so any problems. The interest coverage also is above 7. The ratio of operational income to its interest, so I don't see any problems with that at all in Netflix stock. Regarding the profitability rank, it's very high. The maximum it's 10 from 10. The gross margin is above 40, and net margin is also above 16. It's a nice margin. There are few players in this sector now. It's Disney, AT&T, also we can see the Apple, but I think that this marginality, this profitability of Netflix, for me it's very attractive. The growth rank also we can see here the highest mark, 10 from 10. The 3-year revenue growth is 23, the 3-year EBITDA growth is 26. It's very high, it's double digits, and the future 5-year EPS grow, we can see that it is expected to be 7%, and the future 5-year revenue grow also expected to be more than 10%. So it's a nice projections, and the analysts covering these companies, this sector, are very positive. And now the evaluation of Netflix, we can see that PE ratio 15, the forward is 16, and the current PS ratio, price per share, is below 3. Below 3 is very cheap, because when we have such a net margin of 16, it's okay if we would have a PS ratio 5 or 6. So we have only 2.6, so such a low ratio, it's very nice, and for me it's very attractive. Let's check the historical P ratio. Here we have the data for last 20 years. Sometimes it was more than 200s, 300s. So now currently we can see, let's move to the weekly frame. Yeah, every week, every month, now this ratio for Netflix are improving. So we can see that last 2 years it was 80, 70, 50, but now for now it's below 16. So it's the cheapest PE ratio for the last 10 years. And for me it's also a reason why I'm continue to buying and adding this stock to my portfolio. So it was a Netflix stock analysis. I hope it was useful for you. So if you like this video, press the like button and subscribe to my channel. See you on the next time. Bye.